Today we must talk about a warning sign coming from Germany. I rarely speak about macroeconomics because I'm a value investor. I don't really give a lot of importance to macroeconomics, but this is something we need to talk about. As I said, I'm a value investor, so I agree with Warren Buffett and Peter Lynch, for example, whom say that macroeconomics should not play an important role in our investment decisions because it's extremely hard to evaluate all the factors affecting macroeconomic situations. It's already hard to evaluate in a perfect manner a single stock, so evaluating the world economy is even harder. But today we will talk about a leading indicator, the Zew, the German index, which tracks economic sentiment. The Zew Index is the result of a survey to 350 economists and analysts, which give their opinion regarding future outlook on the economy. And the most recent data was scary, to say the least. The Zew indicator of economic sentiment for Germany fell more sharply than ever before in the March 2022 survey. The indicator plummeted 93.6 points to a current value of minus 39.3 points. This is the biggest drop in expectations since the survey began in December 1991. By comparison, the indicator experienced a decline of 58.2 points at the beginning of the COVID-19 pandemic in March 2020. Expectations are now similarly low as in summer 2019. This is very scary because the indicator is now signaling the possibility of a coming recession in Germany. This is caused by the Ukrainian situation, which is creating a lot of shortages, is creating supply concerns, and it's causing commodities prices spike, which is going to have a scary impact on the economy. In fact, oil, gas, wheat are all experiencing true spikes in prices, and these are going to affect the real economy because people is going to have less money to spend on more futile goods or in travels, for example. People will have to spend a lot for gas, for oil, and for food, so they will not have money to travel, to buy a new house, to buy a new car, and this is going to slow down the economy. The experts continue saying a recession is becoming more and more likely. The war in Ukraine and the sanctions against Russia are significantly dampening the economic outlook for Germany. The collapsing economic expectations are accompanied by an extreme rise in inflation expectations. The experts therefore expect a stagflation in the coming months. Stagflation is an economic situation in which inflation rises but economy does not grow. And this all could worsen and lead to a recession. This is what experts are feeling, and I kind of agree. There is a pretty high probability of a recession coming in the next few months, more so in Europe than in the USA. But in Europe it's becoming highly likely. The real problem in Europe is that wages are not going up. I live in Italy and I can promise you that wages are not rising. So, prices of goods are becoming higher and higher, they are rising, but wages are staying the same, they are not growing, so people will have less money to spend on futile goods. To give you a stupid example, last day I bought an ice cream and it costed me 13% more than last year. That's a pretty significant rise considering that my wage is not rising at all. And in Europe, Germany is actually one of the stronger economies. So economies like Italy, Spain, Portugal are going to suffer a lot from this situation because wages are not going to rise, but prices are going to rise. So this could be a time to be very careful with investing. I'm not going to change my strategy based on this possibility, based on the possibility that a recession in Europe is going to come very soon. Because I'm a value investor, so what I care about is long-term outlook, and long-term all these problems are going to fix themselves. Most likely. Otherwise our future is not gonna be bright and investments are going to be my last problem. But what I'm gonna do is probably being more careful in my investments. Perhaps I'm gonna keep some cash on the side for future falls in the market. I'm also thinking about the fact that usually the stock market is weaker during summer months. So I don't know how likely it is to see the market higher in the next few months. I will probably keep on buying in the next months on every dip, but I will probably be more conservative. Perhaps I will not invest all my money. Let me know what you think about this all. Let me know if you're handling your investments in a different manner than usual. And please remember to leave a like and subscribe to my YouTube channel if you're new. That's it for this video. See you next time. Bye!